All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Monday, May 13th, a really bloody day for the indices today. Let me just go ahead and recap those for you. The S&P SPY finished down 2.5%. The Diamonds DIA finished down about the same 2.5%. The Qs got hit very hard. They were down 3.5%. Total risk off today. I'll go over some of the indices and also what went up. I think it's really revealing too once you look at what went up after the open. But small caps, just to give you the overall performance, small caps finished down 3.2% too. So really not a lot of positives other than a couple levels taken out that I think needed to be taken out. But other than that, I really don't have a lot of positives for the day. So sorry if you're looking for an uplifting video. This isn't going to be it, unfortunately. Worst performing sectors, the Mary Jane ETF, the pot ETF. Why are these things down? MJ is down 5.2%, which, it's a cannabis ETF. It's just mainly risk off. People are just dumping risk assets. They're not being very selective. This does tend to happen in market pullbacks, as people will generally just go ahead and the expression is the out with the baby in the bathwater. People just don't want risk right now, and we'll talk about some of those things that went up. The Chinese internets were down well over 4% again. Biotech, again, some areas of biotech, maybe medical devices may have some supply chain issues with the trade tariffs or their all-out trade war that we have right now. Biotechs were down 4.2%. The banks, KBE, KRE, were down 4% as well. The internet ETF, so you couldn't really hide. So my theory kind of being that you could hide a little bit in the non-tariff related areas. On days like this where everything gets sold, unfortunately, you're not really going to be able to hide there. That ETF was down about 4%, 3.9%. Software names also down 3.8%. And then if we start to look to see, there's a whole bunch of sectors obviously in the middle of that. But if we look at what outperformed better, well, I would say the thing that performed best was Bitcoin, up about 25%. The story with that is, or possibly what may be going out is maybe some Chinese consumers are getting their money out of China, which is a pretty scary thought, but kind of a panic there. Gold miners were up 3%. Gold finished up 1% on the day. Utilities also really well bid. So not everything went down. Utilities look like the all-star of the day, I would say, besides Bitcoin. But let me go through. I'll go through more of those charts and some of the things that I noticed as well. I do have a spreadsheet that tracks what happens after the open. So obviously everything gapped down, and who's going to outperform? What are investors going to buy, institutional investors, and they were out buying things like gold miners and utilities and REITs, so completely risk off. So again, this is not absolute percentage. This is percentage change from the open. Even things like Apple, which you would think more trade sensitive, was down 1%. Netflix was down 2%, and it just gets pretty bad. The energy names really got hit pretty hard too after the open. We've already mentioned the bank, so on and so forth. And that's the best way to sum things up is just looking at that. That was absolutely the case as well in ETF fund flows that I compiled for last week. Last week's numbers. A couple points. I'll just walk you through this for about 15-20 seconds, but there's $8.1 billion of U.S. equity outflows, so pretty big numbers there. Just like I mentioned, again, this was last week's numbers, but same thing. Utilities saw inflows, financials, technology saw outflows. One of the areas that I would say was very interesting was emerging market bonds are really seeing a lot of outflows. That started to happen a couple weeks ago, or I would say a few weeks ago, but that picked up again, both EMB and EMLC. saw those. Interesting. VIX ETPs, traded. Some of them are not ETFs; they're exchange traded notes, but nevertheless, they both saw outflows last week. So, so again, theme of the video is probably risk off. So I'll go. This is the one positive, or maybe I can squeeze out a second positive. Was if you're a member of Tribeca Trade Group, we did a webinar on levels to watch right when volatility started to pick up. We try to think, hey, where could we really find some support if we continue to get hit with a little bit more volatility. And what we said, this was last Wednesday. We said that there was about another 2% down the market could fall. In the S&P, I'll go over Nasdaq as well before we really hit some decent support. So one positive or one silver lining that you could take away is I would say the majority. Well, first of all, everything. Sorry, tongue tied. Everything that we talked about last Wednesday has been taken out. So let me go through. So first of all, the weekly chart. The level that we're going to want to see at the end of the week is 28.17. We're now below that by about 11 handles. So we're going to want, this is just Monday, right? So we've got a long week ahead of us. But 28.17 is the level that we want to be above. If we stay above that, this uptrend is intact, and this whole thing is just a retest coming back into a retest back into support. And again, this is the whole value area for the year. So again, very important that we stay above this at the end of the week. If not, we've got problems on our hands, right? And I think that we obviously had a lot of problems today and a pretty bad reaction to the China retaliation. But 28.17, that's going to be the line in the sand for me. If not, I'll just really have to be trading very lightly, maybe doing some more day trading than what I prefer to do, which is swing trading. But it is what it is. The uptrend will be in jeopardy. So that's again 28.17. I'll repeat that again. Very important that we close above that on Friday. This is what I was talking about in terms of levels that we mentioned this 28.22, which was taken out, right around I think around 11 o'clock today. We tried to actually take it back. So again, this is a virgin point of control. This is a very important area that usually once we start to get below or out of range, right? So once we dropped out of this value area, as price gets closer and closer to this, it's almost like a gap being filled. So again, a virgin point of control, it's a high area of volume that we have not revisited before. And again, that's from this period. Remember, back in April, we weren't even really in this value area at all. So this kind of represented a gap. We've come back and now filled that. So now that this is we almost hit this on Friday. By the way, I think last week really tricky. The way that markets came back on Friday, I think for the most part, a lot of people, including myself, a little bit fooled by that price action. It was so strong coming back. In hindsight, probably a little bit of short covering. People just didn't, shorts probably did not want to stay that way going into the weekend because I really did not see any major investment in, looking after the fact because you don't get the numbers for the ETF fund flows until T+1, but there is no major buying that happened on Friday that caused this big spike, this big hammer bar. There was also, which we talked about in the room on Friday, I was like, hey, there's really no call activity. There's nobody who's really buying aggressive calls. It's all really tiny stuff. So again, after the fact, that kind of just tells you that there really wasn't anybody coming in with two hands buying the dip. It was small related and maybe a little bit more of a short covering bounce from the lows. Maybe some shorts also just didn't want to be exposed in case something else came out with China over the weekend. Who knows? So what I can tell you is this level's been taken out. It's kind of, for me, a box that needs to be checked. Many times we will bounce and revert back. Not all the time, though. Not all the time. So what I would say is, besides that 28.17, I would look for 28.22 to come back, and then you can use this as your stop. But I would, being that we closed on the lows, I don't think that you can basically put a stake in the ground and say, hey, this is where I want to go long. There's other things to consider. Again, we took one of these out on the 1 hour too. Right, so this was the third level that I mentioned in third level to watch in last week's webinar. I said we could go down to 28.10. So again, we took this out. That box has also been checked. So again, that if you're following me and if you know what gaps are, so that gap is also filled. So, and you could see 1 hour bars are basically 1 week of price action. So all the way back here in the beginning of April, where we just went all the way through this value area, that left behind this virgin point of control, that has now been filled. Again, an area of high buyers and sellers, an area of high buying and selling. Price has returned to that and filled that gap, and has taken out that value area. So there, we go to the 1 hour, are there more of these behind them? There's another. I think there's a few more on the 5 minute bar. We'll just wait until Thinkorswim gets this going. Looks like Thinkorswim isn't going to work with me here, but there is another one that I believe is lower. Like I said, I can't get to it, so perhaps I will tweet that out later. But it's far away. I mean, all of those three levels that I talked about, 28.22, 28.17, 28.10, those were all in the vicinity of one another. And sometimes when that happens, first of all, I do think that there's some decent support here. But once those things are so close together, odds are that all three of them will be taken out, which they were. So let me switch over to the Qs. We'll just talk a little bit more. I'm going to just take my time through this video because, today was just quite ugly. We tried. I will talk about the VIX too, but let me just finish with the Qs. We tried to bounce a little bit around 1 o'clock, kind of the lunchtime bounce, and just could not hold it. So the market did try to rally, but just did not have that power. And you can see we're still going down here a little bit here after hours, so not a great sign for tomorrow. Similarly, we've got some levels to look at in the Qs. This one, you've got a little bit more bumper room, 176.19. That would be your breakout. Again, almost all green bars since on the weekly, except for one, which was, I believe it was in March. So now we've got a couple of them. But we're into support. So by the end of the week, again, just like I was saying with the S&P that we've fallen into value, we've got the rest of the week to get above. The Qs could generally continue to go lower here just a little bit. 176.19 is the support in that. And there was several virgin point of controls taken out, VPOCs that were taken out as well. The Qs had one. This was one that I was watching, trying to sit on my hands as best as possible until this level was taken out. So it was taken out. Again, I view that as a positive that it's not still sitting there. Again, you have this one all the way down here, but it's so far away that this won't come into play until we're like all the way down here, which I hope that is not is not highly probable. So here's the 1 hour one. This was also taken out. Very similar price to what was on the daily. Again, each time frame has a different value area. So again, this was from all the way back in February. That was still. Oh, sorry, that's not right. That's one from February, but that's all the way down here. So here's the one from, I think this was also from the first week in April, where we had some really aggressive price momentum. So that's also taken out. So now what I would be looking for, I don't know necessarily tomorrow, but maybe midweek for us to find some support for buyers to come back. Again, I could tell you right now what we've been seeing in the option flow is just very, very light call buying. Here is the call activity for the day, but a lot of it is against open interest. I mean, we saw some picking of the diamonds May 24th calls. We also saw a nice order in the Qs, but we're also seeing large put buying still too. Before I go to IWM, I think this is CPCE. Is this? Is that what this is here for the put call ratio? Put call ratio I think was around. I'm on the 1 hour. Yeah, still elevated. It looks like it closed around 1.2. So again, people buying a lot of puts. Now, usually, so before I go into this conversation, let me go over to IWM because I want to talk about the VIX. Usually, this has to run its course. People will buy puts very heavy for a couple days. And I know we saw that a couple days last week, but I don't, because that we rebounded so nicely. Here's really where I think it gets pretty dangerous. The Qs and SPY, I think they're still, they can still recover from this. And I think overall for the week, if we happen to kind of hang in here, it may not be so bad. Again, what I would be concerned with IWM, it continues to look ugly. We were talking about this at the end of the week, saying it was kind of a kick save. We held the 200-day moving average, but we do have some support that lies back in here, but we've got a virgin point of control down here. And if we happen to go down another $5 in IWM, it's going to be pretty ugly. So that's what that looks like, IWM and altogether. Again, not a lot to hang your hat on, besides the utilities breaking out. Here are the utilities, by the way. So in a firm uptrend, so you can own these here. This was trying to break out back on 429 and then kind of fell apart. It's very interesting. I guess it looked like there was a false breakdown last week. I remember this was Tuesday or Wednesday last week. So last week, if you wanted to hide in utilities, it was pretty tough because they did have like a down 2% day, or down. I'm sorry, maybe not that much. Maybe down 1.25%, something like that. And yeah, I think that was Wednesday, and then we turned around, had a big looks like what, a morning star, I believe, engulfed this bar. Pretty impressive, and then very strong through the day. So let's talk a little bit. So I started to talk about the put call ratio. Usually, from a contrarian viewpoint, the put call, once you have just like I was checking boxes with going down the list of what normally happens in terms of a pullback, the put call ratio is one of those things that it needs to get to extreme levels, where everybody's buying insurance, buying puts, and I think we're pretty, I would say that box has been checked as well. That's been filled as well. The VIX is another one. What I tend to look at is not only the VIX, but the VIX for the Qs, the VIX for IWM. Unfortunately, these all closed on the highs. So it did not, the only one positive I would say out of this is that the VIX did not close above last week's high. So again, but all it could take is one day. Again, I think you just have to use that P word, the patience, and just let things play out a little bit. Friday looked pretty decent where we came in very hard. The one thing I think that we mentioned on Friday was we did not get below the 20 period moving average. But, all in all, watching what happened with the VIX on Friday, it looked like, really volatility came out pretty hard. VXN, you could see now again, so different look here. That is higher than the close of last week. And again, that's the VIX for the Qs. Again, remember the VIX, all it does is measure short-term volatility for the S&P 500. It doesn't look at IWM, doesn't look at the Qs, doesn't look at single stocks. It just looks at what the options are pricing. RVX, which is the VIX for IWM, the small caps, that also didn't take out last week's high. And then the last thing that I'll look at in the VIX space is the VIX for the VIX itself, so the volatility of the VIX. This was kind of interesting during the day. Again, did not take out last week's highs, so same principle there. But, this was something that I was sending out on private Twitter, all morning long. We finally broke this at around 1:30. And it looked like, look at where it found support, right on this 200 period moving average. Unfortunately, this is where we reversed. So unfortunately it found support and then continued to rally through the session. So a lot of damage in the charts, and I think that with I would have said, if the bounce would have maintained and we would have seen that throughout the session, I would have said, hey, that's something to kind of, hang your hat on, and then you could use yesterday's low as your stop. But I think for now, we got to just let this play out a little bit. A couple of things that I did today just, kind of suffered a little bit. I tried to get into ZS. I mean, had a huge day on Friday, but I did say my stop would be 68.60. So it just took it out at the end of the day. So unfortunately, I got stopped out in a couple things. It is what it is. Stops stink, but I have to stick to trading my trading system, right? If you throw your trading system out the window, then you've got nothing. You're basically gambling. If you do not follow your trading system, right, there'll be another chance for me to get into this. A couple names that reported after the close: Take Two, which they halted, but I think it's actually up now. So maybe it actually reversed. So what does this tell me, right? Take Two comes out with horrible guidance, which I didn't get a chance to see what they were doing. By the way, Cyber reports tomorrow. Should be an interesting name. It has a great history. I did put out a trade to consider. Again, I'm not giving out any recommendations or trade or advice or anything like that, but trade idea that I threw out just at the end of the day, because this team does have really good history. So Take Two. You could see that quotation resumes, but their numbers, if I can find them on here. Yeah, here was the guidance, which they were estimating 484. They see full year. They see adjusted EPS 375 to $4, which is really bad. So what does this tell you, right? I guess they're having their earnings call going on, but perhaps the bad news is priced in. If they're now, notice the version point of controls, by the way, taken out. Two of those being taken out to the downside. And if they're up, there was another one down here at 91. But if it's now up, perhaps the bad news is priced in. Remember how, just thinking about this intuitively, but a name that's been pretty beaten up, if they come out with further bad numbers and the stock actually goes up, the bad news is priced in. So we'll see. This is just the first reaction. ST&E also reported. I think they had pretty good numbers. Notice they were just hanging on to the bottom of value, and it looks like they're up to, so nice, right? So this is another software. I believe they're also a payment processor in Brazil, and one of Warren Buffett's holdings, or one of Berkshire Hathaway's holdings. So up to 29. Let's see where that is on the chart right now. Come on, Thinkorswim. Yeah, so 29 should be back in, holding value pretty nicely, and possibly we'll get into this gap, but it's got to get above 29 and change for that. So what else? Some names that I've been holding. I did not add to CRM today. I need to see a little bit more evidence. When things close on the lows, Coop was another name that I took a bunch of price targets last week. It does have support in here, and I said that when I took this trade and took off the targets, took targets on Friday, that I would add back to it. So I did do that. Unfortunately, again, just risk off. So I'll leave the video here for the day, even though I can continue to go through a lot of charts. Microsoft is another name I would be watching. Unfortunately, Microsoft did not hold this support, so another name that fell into value. But just keep in mind, we dealt with a whole headline-driven week last week. This was today, I think mainly, China confirming they're retaliating and that the trade war is back on. It is unfortunate because we went through this all of last year. And I would say that the one thing that's a little bit different is the Fed is being a little bit more accommodative right now. So that might be the one difference for them to kind of go through this trade war. But, you know, I've said this over and over and over. I said this through most of 2018, and I said the longer this trade war lingers, just the more damage it's going to do. So that's what we've got going on, and I think it's exhaustive, the amount of times that we're hearing constructive trade talks and progress being made. I think this is at this point, complete BS that we're dealing with at this point. So we'll see if anything else materializes. I think bottom line, we'll have to see how some of these support levels and some, as I mentioned, some of the boxes that were checked. We'll see if that actually holds and brings some buyers back in. And if you're a member, what we do is during the day we read the tape, so we're very much able to see if buyers are going to come back in, especially to speculative option positions. That's a good sign that buyers are basically liking the valuations at this point and coming in. Are we seeing that right now? No. We saw one Q's order. We saw some diamonds. So a little bit of buying of some of the indices, but we're really not seeing that too much in the single stocks yet. So to be determined. All right, guys, have a great night, and we'll be back pre-market to kind of do the rundown, and we'll see what kind of markets we get overnight. Good luck, everybody, and I'll see you guys in the room tomorrow morning. Have a great night.